All right, guys, welcome to Forex Fundamentals Part 2. Today, we're going to be going over some more technicals, and then we're going to move over on to actually going on to TradingView.com, and I'm going over trend lines with you guys. All right, so before that, first thing I'm going to go over you guys is a candlestick. Also, well, the real term is called a Japanese candlestick, and this represents the movement in the exchange rate within a given period of time. Okay, and it composes of two parts. So there's two parts that make up a candlestick. You have your body and you have your wick, which I'll go more into detail in a little bit. So not just with candlesticks, but with the market in general, when a market is going up, we call it a bullish market. When a market is going down, we call it a bearish market. Okay, those terms also transfer over onto a micro standpoint in terms of a candlestick. Okay, so a candlestick, like I said, candlestick being a movement in the exchange rate within a given period of time. When it goes up, when there's a candlestick where the exchange rate goes up, okay, it's a bullish candlestick. When you have a candlestick that goes down, where the exchange rate is going down, it's called a bearish candlestick. Okay, so up is bullish, down is bearish. Now, this is an example of a bullish candlestick. All right, this is where the exchange rate actually rises. All right, so right here you have your body, which is the green rectangle. Okay, this is the body, and then you have your, and then these two black lines here are called the wicks, also known as shadows, but I call them the wicks. All right, so in a rising candlestick, at the bottom here where it says open price, right? Whatever price is on this line at the bottom of the candlestick, that is the price that it opens right at the bottom of this candlestick. Okay, this is the price that it opens. Okay, within this period of time, okay, we see here, right? We see here on the top wick right here, the max price high. This means that within this period of time, price actually started here, actually reached as far as up here, but actually ended up closing down here, right? This bottom wick here shows you how low it actually went within this period of time. So it opened here, and within this period of time, it actually went as low as down here, and it actually went as high as up here. But then the price, this whole candlestick ended up closing at this price here, which is at the top of this rectangle. Okay, opened here, closed here, reached as high as here, and reached as low as here. Okay, this is a bullish candlestick. The same is opposite. The same is true of the opposite of a bearish candlestick. Okay, you have, so on a downtrend candlestick, you're going to open at the top. So you're going to open up here. Price will open up here on this candlestick. All right, it's going to close at the bottom here of this rectangle. Okay, close price, and then within this time frame, okay, price actually opened here, right? Could have went back up as high as up here, and then actually went as low as down here before it actually closes down here for a new candlestick. So like, for example, when this one closes right here, if the next one is going to be another bearish candlestick, it's going to open up a new candlestick right here, and it's going to keep going down. But if it was a bullish candlestick, it would open here and then go up. Okay, back over here, open here, closed here. Okay, if the next candle was going to be a bearish candlestick, okay, it would start up here, right? Because open price is up here, so it would start up here and then come down. But if this was another bullish candlestick that follows this one, right, you would open here, close here, and then you would open another one right here, right where the previous close was. It would start right here and then go up. All right, so that's a Japanese candlestick, and that's what it represents in terms of a movement of the exchange rate. Okay, this is the body of the wick. Okay, the body is pretty much the colored shape, and then you also have the wicks. The wicks are going to be the thin lines, thin black lines, okay, that point out of the body of the candlestick, which you'll see on a live trade right after this. All right. So the major trading sessions, okay, there are 4 major trading sessions where the majority of trades are being done. Right, we have our London session. London session is when people over in London obviously are waking up and they're trading. We have our New York session, all right, which happens obviously in New York. This is the time frame where it starts, and then you have your Tokyo session, and then you also your Sydney. I personally only trade with the London. I haven't really traded too much with New York, and I haven't traded any of these other two. But excuse me, London's been the one that I've traded the most. All right, now you may be asking, okay, like what are the different? What's so different about the different sessions? Well, different currencies, different pairs move at different rates during different sessions. All right. So here's an example. During Tokyo session, the New Zealand dollar, Australian dollar, and the Japanese yen tends to move quickly in the Tokyo session. Right, during London session, the British pound, the euro, and the Swiss franc tend to move a lot. And then during New York session, pretty much any pair that involves the US dollar moves during New York session. All right, so there you guys have it. There's an explanation of what is the candlestick, how it relates to the exchange rate, right? What were some of the major trading sessions, and what are the major trading sessions? And also what pair moves, which pairs move during, which session. So with that being said, let me go ahead. I'm going to switch my screen over to another screen, and we're going to actually hop onto tradingview.com. I'm going to walk over the interface with you, how to use tradingview.com, and then we're going to go over trend lines. So let me go ahead and switch my screen over to TradingView. Awesome. Okay, so for those guys that are just tuning in now, we are currently on tradingview.com. This is a free platform where you can create an account, and you actually go in, create an account, and you can actually pull up any currency pair to mark up charts. All right, and so when I say mark up charts, I mean this is where we're going to go and do our analysis. This is where I'm going to do my analysis and when I share it with you guys. So go ahead, go on tradingview.com if you haven't already, and create an account. So let me just walk you guys through. This is what the homepage is going to look like. Okay, go ahead, create an account. It's free. Don't need to do the pro account. Once you have an account, you're going to go here where it says ticker. Okay, this little search box says ticker. And here you can type in virtually any currency pair and it's going to pull it up. So I'm going to type in USD, JPY, okay, just like that. And here you're going to see quite a bit of them. All of this means is that they're showing you the charts from different Forex brokers, okay? So here we have FXCM, which is a broker. We have Oanda as a broker. It doesn't really matter. They're practically almost all the same. There's just some of them are just slightly different in price. So for this example, I'm just going to go ahead and click on the FXCM one for USD JPY. Okay, so the first thing you're going to see is you're going to see a chart that looks something like this. Okay, now don't worry, don't feel overwhelmed, and it's absolutely okay to not understand anything because we're just starting out, and I felt this way as well too. So bear with me. I'll walk you guys through step by step, and I'll actually show you how simple it really is to actually read this. But before that, this is a chart, right? This is pretty much what you're going to see every time. This is what we call a naked chart. Okay, a naked chart means it's without any indicators or anything like that, which I'll go into detail in the future. But this is essentially a naked chart. You're looking at this blindly, all right? So up here, you have obviously your symbol, okay, your ticker, USDJPY. And remember in the slides, I talked about how the candlestick represents a movement in the exchange rate within a period of time. Okay, so I zoom in a little closer here, you guys can see here, right? These are all examples of candlesticks, right? These are all examples of candlesticks, okay? My blue ones, the blue ones you see here, the blue ones I have here are my bullish candlesticks. The orange ones are my bearish candlesticks, okay? Then you also have the body and then the wicks, like I explained, all right? Now, right now, I am on the 1 hour. If you go up here where it says 1H, I am on the 1 hour time frame, which means it takes 1 hour for one of these candlesticks to form. So it means within 1 hour, okay, the exchange rate started here, zoom in. Within 1 hour, the exchange rate started here, and it came all the way down here, and ended up closing here on this bearish orange candlestick here. Okay, so it means when the time frame is 1 hour, it means it takes 1 hour. This is 1 hour of movement in this candlestick. Okay, for USD JPY. So that's what the 1 hour time frame means. Now, general rule of thumb is on higher time frames, on the 1 hour, 4 hour, and the daily and the weekly and monthly, on these higher time frames, you're combining a lot of movement into one candlestick, which means if I go up to the 4 hour, for example, okay, it's gonna give me a more consolidated view of the market, and it's going to give me a better idea of the direction and the trend, okay, underlying trend. On higher time frames, I'm going to get a clearer and better picture of the trend of the market. All right, as we can see here on a 4 hour time frame, okay, which means 4 hours for one candlestick to form, we can see that this is a general bearish motion. You see this? See how it's going down? Okay, on a higher time frame, you can see, right? Overall, it's doing a downtrend. So time frames affect the time frames that you look at affect the movements, the consolidation of the exchange rates. So if you want a clearer picture of what the market is doing and where the market is going, go on a higher time frame. Now let me show you guys what happens when I go into a 1 minute. This is what happens on a 1 minute. So which means it takes 1 minute for each of these candlesticks to form. You cannot trade. You cannot trade on a 1 minute because it's nearly impossible to know what direction it's gonna go. You guys look at this. See how it's just kind of up and down, up and down, up and down, up and down, up and down. This is impossible to trade because I don't know whether it's gonna go up or down. But if I go onto a high time frame like the 1 hour or the 4 hour, okay, I'm getting a clearer picture. I'm getting a clearer picture of the market and where it's going, and I can get a clear trade setup. Okay, when I can see the movement that's consolidated instead of being very kind of sporadic and like this on a 1 minute. Okay, so lower time frames gives you a harder picture, gives you an inaccurate depiction of where the market is going. Okay, but if you go on a high time frame like the 1 hour or the 4 hour, okay, we can see now that the movement is consolidated a little more. Okay, you're getting a clearer picture of the market movement. Okay, and as we can see here, okay, it's going down. Okay, it's going down. So real quick, on the left side here, we have some tools. All right, the one that we're going to be using today is called trend lines. Okay, I'm going to show you guys how to draw a trend line, what is a trend line, and how trend lines can help in terms of knowing when to get into a trade. So first step to choose a trend line. Second box from the left, okay, 1, 2, click out this little arrow, and you're going to select trend line. You click that. What happens is you click once on the chart, and it's going to do that. And then you can drag. You can kind of just drag your mouse around, and then however you want it, and then tap it, press it again, and then boom, it's going to make you this trend line. And you can actually grab one end and move the trend however you want. Okay. Now we use trend lines for a couple reasons. Okay. Trend line. We draw trend lines to find the direction of the market, okay, to act as support and resistance, okay, and I'll cover support and resistance in a more in-depth training within the next week or so as well too. So okay, so trend lines are pretty much to show you where the direction of the market is going, and also to act as support and resistance, and acts as a confirmation to get into a trade. Okay. Oh, erase that. Trend lines. Oh, also when drawing trend lines, connect from wick to wick. Okay, so let me go over here. Right now we're on the 4 hour on USD JPY. Okay, I'm looking at this right now, and I'm seeing a downtrend. Okay, we see the market. We see the market going down. Okay, this is pretty obvious to everybody, right? In a downtrend, you're always creating lower highs and lower lows. In a downtrend, you're always creating lower lows and lower highs. Wow, what does that mean? I am about to share with you guys. Okay, in a downtrend, you're always creating lower lows and lower highs, and this is where you're going to connect the trend line. So, let's say we started from this point here. Okay, let's say we start from this point here. Okay, this point right here. Oops. This point right here is called a lower high, and what that means is this high, this peak up is lower than this previous peak here. Okay, this is pretty obvious, right? This is not as high as this, so this is called a lower high. Okay, now if I copy this down here, this is called a lower low. Why? Because this low is lower than this low right here. Okay, this low is lower than this low. This high is lower than this high. Okay, and you see it's gonna repeat. Okay, you have another lower high here. Okay, then you have another lower low here, et cetera, et cetera. See that? So it's constantly creating lower lows and lower highs. Okay, so that's an example. So they're not an example, but those are the elements of what makes a downtrend. Okay, it's creating lower lows and lower highs. So when I actually draw a trend line, so pretty much what a trend line is, you're connecting different points along that line. Okay, so what I'm gonna do is first thing I'm gonna do is I'm gonna use my trend line, and I'm gonna start here. I'm gonna start at the very top. Okay, this is the very top of this point here. I'm gonna start here. Okay, now you need at least 2 or more points for a trend line to be valid. Okay, now what you don't want to do is you don't want to force a trend line, and what I mean is don't try and make a trend line fit somewhere that it shouldn't. Right, now when you're doing this, okay, what I'm gonna do is I'm gonna connect this point to this point here, because then it allows me to go into the future, right? Why wouldn't I connect these is because I could connect it here, but price is over here, which would make this trend line invalid. Well, not invalid, but old. Okay, so instead of connecting it here where price is not relevant, I'm gonna move it here. Okay, where I have one touch here to the trend line, but then I give myself room where price may hit this trend line in the future. Now, look at that. Watch this. So let me erase this. Okay, you have one touch on the trend line. You have 2 touches on the trend line. Jesse, do you see this pattern here? Okay, after I drew this trend line, okay, with this one touch here, price goes down, goes up, taps that trend line again, goes down, and is currently back on its way up. All right, look what happened. Look what happened. Up here, it hits the trend line, okay, and it falls. Then it hits this trend line at 115,471, and what happens? It falls. Do you guys see the pattern here? The movement? Okay. So based on this, what do you think is going to happen once this goes up, hits this trend line? It's probably going to go like this. Okay. And right here, I want to be looking very closely when price gets close to this line and seeing what it does. Seeing what it does. And here I could get in for a sell. Because I look back and I see twice before it hits the trend line and it respected it. Respected means it didn't break. Okay? Respects the trend line here, falls down. Comes up, hits this trend line again, hits it, falls down. Okay? Let me show you guys how much money could be made here. On this one drop, 696 pips. Okay, you guys do the math. I showed you guys how to calculate that. 693 pips. 693 pips. And then let's catch this drop. About 726 pips. And how I know that is, if you look at this number here, 7268, drop that last number and it gives you the number of pips. Okay, so this drop here is about 726 pips. That's at least 1,000 plus pips. 1,000 plus pips, guys. On a mini lot, that's $1,000. Right? This is a downtrend. Okay, like I said, this is a downtrend. It's creating lower highs. All right. Oops. It's creating lower highs. This is a lower high. It's going to be a lower high. Okay. Then it's creating lower lows. Lower low. Okay. Lower low. Then it's creating right lower lows. Okay. So that's a downtrend. Okay. And then when you draw them, let me zoom in low here. I want you guys to connect it at the top of the wick. Okay, see how my green line, it intersects the wick, which are the black thin lines at the very top. Okay, see that? I want you guys to make sure that it touches the wick. Okay, up here, make sure it touches the wick. Okay, so that's a downtrend. That's a downtrend. That's a downtrend line. Creating lower lows, creating lower highs. Okay, touch. You got 1, 2. You need at least 2 more touches. Okay, so now you can see how this kind of plays out, right? This movement here. So imagine this line is like a ceiling of your house, right? You bounce a ball up to the ceiling, hits the ceiling, bounces down, hits the ceiling again, right here, bounces down, right? So this is pretty close. This one's pretty close to pushing this line. I'm gonna be watching this now. I'm showing you guys how it plays out. But if it continues doing what it does here, it's gonna hit this trend line, all right, and then it's gonna bounce off, and I might even get in on a trade here. All right, so that's a down trend line. Let's go over up trend lines. All right, so let me go ahead and zoom out. Go ahead. Let's go on the lower. Let's go on the 1 hour. Let's see what's on the 1 hour. 1 hour. Okay, so here's a quick little example here. So here, okay, you kind of see how these little spikes here. Okay, so this would be an uptrend right here. be an uptrend right here. Okay, you have touch 1, you have touch 2, okay, you have a couple touches here, okay, touch 3. You guys see how a trend line for 2 points here in the past is also relevant in the future as well too? Keep that in mind, okay? Keep that in mind. A trend line can be just as relevant in the future as it is in the present moment. Right here, okay, this trend line here, when it formed here, for these 2 points, it was valid. But see over here, as this extension of the trend line goes, right, it still has an effect even in the future. You can see here, okay, it breaks through, boom, hits this trend line, breaks through, okay, hits trend line again, and it keeps going down. So a trend line it's just as valid in the future. It's not like you just do it one time in the present and then it only works at that moment. No, a trend line will stay relevant in the future as well too. So this is an uptrend. Okay, and an uptrend is the complete opposite of what you have in a downtrend. In an uptrend, instead of creating lower lows and lower highs, you're creating higher highs and higher lows. Okay, this high is going to be, okay, this high is higher than this high. Okay, this high is, let me see. Okay, this high is higher than this high, and then it's going to create higher lows. So even the lows are right. Each low in an uptrend is going to be higher than the previous one. So it's going to be higher or low. Okay. Right. So this low right here, in this area, is higher than this low here. Okay. Just like a downtrend, just complete opposite. Excuse me. All right. Now again, it also acts as a form of support and of a ceiling over here. Okay. Ceiling on this green line. Why? Hits the green line, boom. Okay, see the shadow? That wick that I talked about, the wick hits the trend line, boom, boom. Exchange rate goes down, goes up, again, hits that trend line again, respects it. Wick hits that trend line, boom, comes down. Okay? So again, recap. In an uptrend, you're creating higher highs and higher lows. Okay? Higher highs, higher lows. In a downtrend, you're creating the opposite. Downtrend, you're creating lower lows and lower highs. All right? Downtrend. So let's recap. Uptrend, creating higher highs and higher lows. Downtrend, creating lower highs and lower lows. All right, so here's the rule. Yeah, here it is. Here's the cliff notes. Okay, on an uptrend, you're creating higher highs and higher lows, which means every single time the exchange rate goes up, right, is going to close higher than the previous high. All right, see up here? Okay, it create another higher high. It's going to create another lower low. This low is higher than this low. This low is higher than this low. This high is higher than this high. This high is higher than this high. Okay, you guys see that? So that's what it means. This is what it means. Opposite is true of a downtrend. Downtrend, you're creating, right, lower lows here, here, here. You're creating lower highs here, 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 here. Okay, and then when you draw the trend line, you connect it from the top of the wick. You connect it from the top of the wick, and you need at least 2 or more points. Okay, so here's the downtrend. Okay, you got 1 touch here, you got 2 touch here, you got 3 touch here. boom, boom, boom. Okay, trend line acts as a form of resistance, which is imagine resistance as the ceiling of your house. Okay, imagine this green line is the ceiling of your house. You bounce a ball, hits the ceiling. What happens? Bounces off. You bounce the ball again, hits the ceiling, bounces off. Comes up, hits the ceiling again. What happened? Bounces off. Okay. You could get into trades. You could get into trades at these yellow areas for sells. Okay. I could have gotten to a sell here. I could have gotten to a sell here. I could have gotten to a sell here. Why? Because every time, because I look at it, I look at the behavior of the candlesticks, every time it's hit this trend line, it's shot down. That's my cue. Okay, shot down. I want to get in for a sell. Okay, look, boom, came down, came back up. Okay, came back up. It actually came back down again before it actually broke over. But look at, you could have gotten to about 4 trades here. 4 trades here. Okay, so think of this trend line as like a ceiling of your house. And you bounce a ball off the ceiling. What happens when it hits the ceiling? It's going to bounce off, right? You want to get into trades for a sell right here, because why? How did I define what a sell was, right? A sell was when you want the exchange rate to go down, which is exactly what we're seeing here. We're seeing the exchange rate go down, right? We're seeing the exchange rate go down after it hits this trend line. All right. So you have homework to do. Your homework, okay, is to go onto tradingview.com, make a free account, okay, look up the ticker, USDJPY, and I want you draw several uptrend, downtrend lines on the 1 hour or 4 hour time frame. Okay, remember, choose time frame by clicking the drop down next to the ticker here. Okay, 1 hour, 4 hour. All right, so here's your homework. Go into tradingview.com, okay, what I'm on now, make an account, look up the ticker USDJPY, the one that I'm on right now, and I want you to go ahead and draw several uptrend, downtrends on the 1 hour and 4 hour time frame, and I want you to mark where the lower lows, lower highs, higher highs, and higher lows are. Okay, I want you to mark like what I did here. Use this text button right here. I want to use this text button, and I want you to write out for me where those areas are, where the lower lows are, where the lower highs are. Okay, I want you to mark where those are with the trend lines. Okay, so just kind of do what I did here. All right, trend lines, and I want you to tell me exactly where the higher lows are, where the higher highs are, et cetera, et cetera. All right, so that's your homework. When you guys have your lines, when you guys have them drawn out, this is what I want you to do. Go ahead, click on this photo icon here. Click on this photo icon here, and it's going to create a screenshot of your chart markup. It's going to give you a link. Okay, when you guys are done with your markups, I want you to take this link and I want you to post it in the group page. Okay, once you post it, anyone that posts it in the group page, I will personally go back, look at your chart, and I will review it for you. If you watch this but you do not take the time to mark up your trades and get feedback, I'm not going to know. I'm not going to be able to give you any feedback. So if you're really serious about this, okay, obviously you are if you're watching this video now. If you're really serious about this, watch this video, okay? Understand what a trend line is, learn how to draw it, learn how to mark your higher highs and higher lows, okay? Do your homework and post your screenshot in the group chat for review.